Hello and welcome to ProElliottWave.com video series for the week of the 17th to the 23rd of November. In this video, we're going to cover the US dollar index, the Dow, and the S&P. Let's get started. Let's go over our disclaimer. This site and services are for educational purposes only. Investing in securities, forex, and futures markets carries a high degree of risk, and you can lose all your investment money. All opinions expressed and data provided herein are subject to change without notice. The services offered by us may not be suitable for all investors. This material is not intended to provide and should not be construed as providing individual financial, investment, tax, legal, or accounting advice. You should consult your professional advisors prior to acting on the basis of the information here. For more information, please contact us at ProElliottWave.com. Let's take a look at some of the key economic events that are coming up for the following week. I would keep my eyes out on Wednesday as the main date for all this action to happen. Actually, starting Wednesday, Thursday, or Friday, there should be a lot of news. In the US markets, take a look at the openings for Wednesday morning, Thursday morning, and Friday for the core CPI and um, existing home sales, FOMC meetings, and unemployment claims. There's a whole bunch of stuff also in the Eurozone as well. Take a look at this. You should find it on our site as well. Let's move right along, right into our um, right into our account for the Dow. I believe we're working on our fourth wave. We've completed hopefully the D wave by this is our three A B C D E coming down to an E. Whether this is going to be an expanding triangle or not is yet to is we have to wait and see for this to show itself. There is there is a theory that this might have been the end of the fourth, and this is our first bullish run up. We'll wait and see how this is going to react, especially if it starts coming down. What does it retrace to, and how does it retrace? But for now, this could have been the end of the fourth, and this could have been definitely a beginning of the fifth wave. However, it's not apparent. As you see, we do have an expanding triangle working at this. The reason why I'm showing this more than anything else in our accounts, because we do have those alternate accounts in the market. Most of the market is believing that that was the fourth and we're going up. So let's see if we can offer an alternative so for you guys to be aware, but at the same time be completely aware of the main primary account that everybody has as well. Keep your eyes open because both of them are completely valid until proven wrong. So let's go in and take a 4-hour look, the 4-hour chart. Okay, continuing with our 4-hour chart, this was our C, A, B, C to a D, and the D's so far I've broken it down to an, if you take a look at this, we have an ABC working, and this ABC, we've broken it down to another ABC. Whether this holds here remains to be seen. Um, We have exhausted, I believe, all these levels. However, we don't see any exhaustion in the MACD or the stochastics. So the bulls are running the show. So be careful if you're trying to short this. I wouldn't short this until you have a sign, at least the break of these trend lines and confirmation that there are things in the market. Some key events might start this process to the downside. However, everybody's still bullish. So keep your eyes open on this. I would take a look at the hourly and 15-minute charts as we've updated all of these. Let's move on to the S&P. We completed the fourth here, and we're working on our fifth wave. And the fifth wave is broken down as a 1, 2. I believe we're working on the third wave of our fourth wave of our fifth wave. Now here you see an ABC to the third And again, same similar pattern as the Dow with an ABC. Whether this holds is a key moment for the S&P. If you take a look at all these numbers, you're looking at the Dow 16,000, S&P 1800, Nasdaq 4,000. These are historic highs that we have for the Dow, and the S&P we haven't been there. Well, the S&P for a long time, but the Dow is all-time high. The Nasdaq hasn't been here since our crash of 2000. So uh, this is a historical time. Whether we continue with this bullish run or there has to be a correction at one point or another. These are very key points with all these trend lines, with all the Fibonacci's and so forth. Something's got to give. Let's see who wins in the next couple of weeks. But it is the time for all these things to make a move. Now, whether you want to be in front of the action and take a risk, I would be very tight with my stops because it is very dangerous to stand right in front of this bull market. Let's take a look at the 4-hour chart. Okay, the 4-hour chart again coming off of that B, and we have an ABC, very similar to the Dow. And as you can tell, we're right off of these trend lines, so I believe we've done it. So let's see how we're going to react. We got to start taking some of these supports out at 1773 and then 1740. I'm sorry, that's 1778 and 1740. If these key weekly supports or daily supports are taken out, then we definitely have a chance of this coming back down and correcting. I mean, a correction in the S&P market of 170 points is not, or 180 points is not that far off to think of. It's only a 10% correction, and as you know, we haven't had a corrective move in over a year or so, as big as that. So we we are due for some sort of correction here, and we've had 5 consecutive updates in Dow, 5 weeks or so. I think the record is 6 weeks. So keep your eyes on all these things. I would go in and take a look at the 15-minute and hourly charts to see how we're breaking this down. And that. Unfortunately, this week we don't have a gold update. Our software is not allowing us to take a look at the gold. It has some missed data. We're working with our data providers to see if we can get that as soon as possible. But nothing is that different from our main counts. It's just the intermediate counts that have changed. All of it stands the same as you've seen it before. So let's move on to the dollar index. And the dollar index, let's start with the daily. We've completed a 2 here, and we're off to go. And I believe we completed a 1 here, very similar to our Swissy chart. And you can take a look at that chart and the video on our site. Here we've completed the 1. I believe we're going to do an ABC down to a 2 and then go up. We've broken these trend lines. Again, nothing is much different from our midweek video, just a little bit more sideways action and breakdown. So do listen to our previous videos and take a look at the charts. Good luck trading this week. Be extremely careful with all the news coming out and where we are in the markets. I believe we're due for a correction. So sit tight. Good fortunes and good luck trading this week.